Hey, good morning, everybody. Welcome to the Ankerstar Wealth a Morning Show, and welcome to almost the last day of July, another month about to hit the books. And hopefully you're spending some of your time watching the Olympics. In the crazy world that unfolds for us for every 4 years, it seems like the Olympics kind of brings us back together. Sometimes you see what true heroes are in action, like the Clark Kent of the pommel horse for the U.S. men's gymnastic team, getting them their first medal in 16 years. Also, if you know the name Alona Marr, a U.S. female rugby player, she's bulldozing people like they don't even exist. This is just some good stuff. And today is my youngest daughter's 17th birthday, and she insisted that for her birthday present, she wanted to get up at 6 in the morning. Teenager up at 6 in the morning. She's
Wow.
back asleep. She's back asleep, by the way. Anyway, but she did get up early and insist that I watch the men's volleyball team, of which her coach's cousin, her volleyball coach at UNLV, her coach's cousin's a libero on that team. So pretty cool experience. And yes, the U.S. men won 3-2 in a lengthy match. So she went back to bed. I went to work. She got the better deal there. But hopefully you're watching that again. A lot of feel-good stories that come out of the Olympics, despite the maybe the opening ceremony not being the most awesome. But here's what we're going to talk about today is not the Olympics, but we're going to transition into the normal lineup of Steve talks about something boring, but I'm going first today. I'm tired of taking backseat to Mike, and then Mike will talk about more interesting stuff later. My boring topics, again, one thing that we're really looking hard at right now as we enter, we had a great first 6 months, 7 months, pretty much run up in the market. The volatility, we used to think, okay, well, maybe the election's over. Now it seems like everything's the dead heat in the election. Part of that's just the media doing media things, but really looking at how to get the most risk-free or low-risk return out of the market. So again, I've talked CDs before. I've talked USFR, which is U.S. Treasuries. Today, we're going to talk about VCLT, which is a Vanguard long-term corporate bond fund. So I'll start with that, and then Mike's going to talk about, ouch. CrowdStrike. I don't want to say it too loud, but CrowdStrike. Obviously, that was a company we had high hopes for. It took off to the moon. But what you can see is, investing, you have one bad day, and that's all you're going to be remembered for. So they have their battles. Mike's going to peel that back a little bit and also kind of look at, hey, if you'd have just gone with an ETF, where would you be right now? Sort of thing. I think the results may surprise you. And then lastly, because Mike fills in this void with every time he's got an opportunity, there's going to be some Jensen Huang talk and Nvidia as he concludes. It is entering our models. We've got some in there already, and Mike's going to talk about that as well. Before we begin this financial education presentation, you have to do your own due diligence for acting upon anything you hear in this presentation. Full disclaimer information is available at ankerstarwealth.com, and the opinions expressed are Mike and mine alone. Let's start with my opinion on what's going on with, that is not right. Here we go. There we go. Let's talk about, first of all, philosophy, right? So here you have, this is a live shot of the top 10 holdings in the Ankerstar Wealth book.
Not seeing anything there.
You're not seeing anything?
It's up now.
Okay, gotcha. Appreciate that though. So there's the talk and then there's the walk. Obviously, the walk is exactly what you're seeing because that's what we're doing with our money, your money, and everybody who we're blessed to have as clients. We always have your Apple, Amazon, Google. Those used to be 1, 2, 3. Okay, Bitcoin snuck in there, so 1, 2, 1, 3, 4 for a while. Those are playing offense, right? Best companies in the world. Bitcoin playing offense, but the rest of the 6 holdings you see up there are all playing defense, starting with U.S. Treasuries and USFR. And you said, well, Steve, I thought you said we were going to go out on this whatever yield curve thing because rates are coming down. Well, rates haven't come down. So we're staying long and strong in the short term, but we're going to make that transition. So I'll show you the options there. And notice right here at number 6, BCLT, and that's really the topic I'm going to talk about today because I'm excited because not only is it paying almost 5%, you're going to see an appreciation, basically undoing what 2022 did to the bond market. And then the rest of these are all defensive plays of a different nature. But let's talk USFR. You can see the Wisdom Tree Floating Rate Treasury Fund. It's a seesaw, but this is only like 25 cents. It looks more bigger than it is, but basically it stays flat. It pays monthly, and it pays down here at the bottom 5.4%. 39 out of treasuries. So that's why if you've had a CD mature, you've seen a switch to the USFR, and that pays out monthly, which is what you're seeing in the chart. Is it runs up increments basically every day and then drops when it pays out and then runs up again, right? So VCLT is a different animal. So when you look at this chart, this is a 1-year chart. You can see it kind of dropped and then it's just not done a whole lot for the year. It pays 4.97. So why would I want something that pays less if I can get 5.4 for free? Well, we're in that 5.4 right now, but we're making that switch, and some of the money already has, because when rates start to drop, what you will see, I changed this to a 5-year chart now, and this is 2022. That's January of 2022 all the way to December of 2022. So that was the rate hike scenario. So rates go higher, your bond VCLT and all the worth, the net worth of your value of, of your corporate bonds dip. So we're going to see that in reverse here. When rates get cut, you're going to see your bond portfolio go up. So I fully expect VCLT to go from 77 today to back probably over 90 fairly quickly when rates start to get cut. Why are we doing that now versus waiting? It's like I say all the time, I'd rather be 3 hours early than 3 minutes late, because markets price in stuff almost immediately. So we're here early, because if they do surprise us with a cut here in September coming up, then okay, well, we're positioned for it. So that's why you don't see us going all or nothing on those two options. So again, CDs at 5.15, USFR at 5.4, risk-free, but you have VCLT sitting here at 4.9. Some CrowdStrike.
All right. So you ready to talk about CrowdStrike? Let's see here. I'll start off with just a quick story. There was a game once where my son played baseball. It was like an all-star pitching thing, and he pitched and he got shelled. Like, he gave up like 5 earned runs and balls were getting killed off of him. And at the end of that game, we had to play a second game, and he was like, I hope I pitch in the next game. And I was like, oh, I hope you don't. That's the way I feel about cybersecurity right now. I know cybersecurity is a great long-term play, but after CrowdStrike, I'm like, oh, I don't want to see cybersecurity for a little bit, and I will show you why. And I'll start off with, this is the headline that comes out is, everything is getting blamed on CrowdStrike. It is the catch-all. I stopped at a gas station the other day and they said, we're doing cash only. This is a week afterwards. And I said, oh, you guys still doing cash only? And they said, oh, every morning something doesn't work. We think it's CrowdStrike. I'm like, oh my gosh, I don't want to hear that. Anyways, a lot of companies, a lot of industries were impacted by this situation. CrowdStrike coming into it was doing fantastic, kind of taking over the market leadership from Palo Alto, in my opinion, added to the S&P 500. But with this one update, and we don't know, is this one person's fault? Is it a small team's fault? I mean, this is, everything is going to be blamed on them, and there is a possibility of litigation. They do have insurance. I read it was like $5 billion worth, but it could go higher than that as far as damages. And and I want to show this is the graph of CrowdStrike, a 1-year graph, and we entered this position in January. So we entered it right about here. I don't know, 235, and you can see it went up nicely. And then this big spike here was when they got added to the S&P 500. There's only 3 stocks that got added. They were one of them. Shot up. I was like, wow, this, it was up, I don't know, 40, 50%. So absolutely loving it. And then since then, just brutal to see this drop off all the way back to what they were at the beginning of the year, which, selling off a 30-year value is painful just because it's based on one incident that this caused this. The reason why we have taken it now out of our exponential growth stocks, obviously it's not exponentially growing anymore, is it's not as much that the company themselves has changed, but the market around them. Obviously, there's litigation risks. They're going to be spending the next 6 months to a year messing around with this litigation, as well as, in my opinion, they lose all leverage in negotiations for renewals. So every company that owns CrowdStrike or uses CrowdStrike is going to come back and say, we're not taking any price increase. You guys are going to decrease our price because, you cost us business. They lose all leverage. It's so unfortunate, that this happened. I will say that, one little, a little icing on the cake is we also were in SentinelOne, which hadn't done near as well as CrowdStrike this year, but when CrowdStrike dropped, with anticipation that SentinelOne will get more market share, they actually went up some, not near enough to offset this. What I do want to show is CrowdStrike versus the cyber ETF. And, CIBR was something that we were in previous years, but we went ahead and picked what we thought was a winner, and it was a winner. At one point, you can see the cyber ETF has traded pretty flat. At one point, CrowdStrike was up 50% against it, and now CrowdStrike has dipped actually underneath of that. So just one more reason. I mean, overall cybersecurity was kind of flat this year, as we saw most people are focused on AI, and cybersecurity, is a necessary thing. But it just overall, it hadn't done that well, except for CrowdStrike. So any questions, Steve? You want to add anything to that?
Yeah, I will just say this, as when people look at this chart and they hear us talking about moving out of the position, I will say that, folks are like, well, Steve, how could you guys sell now? It's too cheap, right? Why don't we just hold it? Well, it's the holding time frame that that you might be looking at. It could be a year or 2 or 6 before this comes back. So kind of the point I would make is, just because things are cheap again, they need a catalyst to go higher. And in this case, I think time is a necessary evil for people kind of digest and forget about this event and see what the damage is. But there's absolutely no catalyst for it to go higher, right? So that's all I would have to add on that.
Okay. So, after looking this, CrowdStrike got shelled. I hope it doesn't pitch in the next game. I'm taking it off my bullpen. It's not going to pitch in our next game. It could go out and do great from here. I hope it does. I really do think it's a great company. It's just, there's so much things piled against us. And I mean, this is where I really feel for a CEO who founded this company, that one incident, I mean, this may be a word that people know from now on to the negative. Not a good brand message. So, but I will talk about a stock that we are starting to like. We've always liked this stock and we've always liked this company, but the question is it priced at the right point? So I'm bringing up the graph of Nvidia. So when we were getting calls on this back in June, like, I want to own Nvidia, I got to own it. They did their 10-for-1 split so it was at $120 a share. It went up to $140 and everybody wanted it all the more. It is now 20% off, a little bit more than 20% off. 20% would get it at 112, and right now we can get it at 22% off. At one point, Nvidia took over past Apple and Microsoft for the #1 most valuable company in the world. It's dipped back down, and you can see that, we didn't like the price point at between 120 and 140. If people had it, we held it. It's not like we were saying to sell it, but we definitely didn't like it for adding to our model. We like it here for the more aggressive portfolios, and believe this is a top company going forward. And there's certainly some price appreciation that we can experience. So, anyways, like it. I did want to show a graph just to kind of show a comparison. So this is a year-to-date graph against Apple and Google, and you still can see that Nvidia has outperformed them on a year-to-date basis. I mean, Apple and Google are up 14 and 22%, which halfway through the year, that's a great return. But you can see what Nvidia has done. But when you look at this at a 3-month level, so this is when you can see Nvidia really peaked. you can already see Apple in the last 3 months has outperformed it, where Google has been relatively flat. So it's just interesting when you look at different time frames. Apple, our number one holding in the book, last 3 months up 26%. Yay. I mean, that's fantastic news. Nvidia's only up 22%, but it feels like it's a buying opportunity because at one point they were up 50% in the last 3 months. So, if you have a more aggressive portfolio, don't be surprised if you see Nvidia come in there to complement your other tech offerings. I know we're seeing some rotation out of the Mag 10, whatever, top 10 stocks, I'll call it. However, when you think long term, what do you want to own? You'd love to own Nvidia on sale. So, that's what we're looking for. We expect some continued rotation, but in the long term, these tech stocks will do fantastic. So, with that, I'll turn it back over to Steve.
All right, totally agree. Thanks, Mike, for covering those, and for everybody out there, don't forget to watch some Olympics while it is going on. Again, it goes by quick, and we will be back with you guys tomorrow with the latest update. Have a good one. Bye.